All right, everyone. So we're going to come up with a game plan for the week ahead. This last week was pretty wild. We had some big momentum, a surprise move that I didn't expect, where a stock went from $6 to $28 a share in about 3 minutes, but it rejected. We also saw a couple of pretty intense short squeezes. So let's jump into it. All right. The metrics for me for the last few weeks, last 30 days, sitting at about $149,000 of profit. Slow and steady wins the race. I'm pretty happy with this. There were definitely some days where I could have leaned in and done a little bit better, but for the most part, I've managed my risk pretty well, and risk management is first and foremost. So, there are people out there, no doubt, that have a higher risk tolerance than me, will have bigger profits. And look, that's awesome. Good for them. I wish I had more risk tolerance in a way, but I've been through phases where I took big risk, and I've learned the hard way how difficult it is for me to handle the drawdowns that are associated with those big risks. So I've kind of reined myself back in a little bit where I'm trading a little less aggressively, but I'm still performing pretty well. And I'm doing it with a much more even keel, which I feel really good about. So anyways, I'm always trying to push the edge of my comfort zone and keep scaling up a little bit more. But we've been in a nice little upstreak in the overall market, so or in the small cap market. So this has been great. So this is the last few weeks and the month of March so far. Looking pretty good. $21,000 this past week, not bad. 5,000 from the first week of the month. This is solid. So sitting at 27,000 here on the month, and that's after fees and commissions. Naturally, I was a little disappointed on Friday because I was up 7,000, but I gave that away. So this was the drop right there. It happened pretty fast, and unfortunately, when that happens, the right thing to do is to walk away. But because I had traded so much, I had incurred quite a lot in commissions. So, anyways, not super happy with that. But it's always better to remind yourself the glass is half full. You're still green on the day. Life is good. Going into the weekend, let's enjoy the weekend. Let's not do something crazy on a Friday afternoon and, send myself into a big drawdown. During the week, I also did a series of case studies on some of our big momentum stocks, which we can look over here in brief for some of you guys who may have missed some of the recaps from the last week. So we had a nice move on LYT and CERO. These were two that were really super impressive. This was just awesome to see. CERO, this was the stock that, let's see, this one went up from like $6 a share to $28, and it did it in like 5 minutes. We can look at this on the 1 minute. Unfortunately, what sometimes happens with these stocks is when they go straight up like that, they just kind of fade back down. They're not able really to hold those levels. And as a result, they do end up selling off quite a bit. Let's see, I just got to back out the chart a little bit more. So look at this. Basically, it's one candle. It's, well, not literally, but you can say basically it's 3 candles. It's 4 candles where it went from $4 all the way up to $28 a share. This was insane. But it was on very light volume, and then it sold off all day. And I think insiders must have taken this as an opportunity just to dump shares on the market because there was selling all day long. So the net result was that the stock sold off. And I actually didn't make money on it. Well, I made $300, but I didn't do particularly well on it. So that was CERO. So that was a tough one. And then in contrast, earlier in the week, we had APM. And APM was much different because it gave us this pre-market sort of pop, which is similar. It then kind of faded and started to unwind, which also is like, yep, all right, got it. And then at like 10:30, 11, it broke VWAP, and this thing took a little bit of a trip to the moon. It went up to like $17 a share. Now the float on it, 2.5 million shares. It's a pretty low float. And I think that was definitely a contributing factor for that stock. LYT, This one had a 339 million share float. So we look at that one and you'll see again, these lower float stocks are putting in some really impressive moves. This is something we're going to continue to see. So LYT, look, this went from $7 all the way up to 18. With that float though, this was a 100,000 share float. How in the world does a stock have a 100,000 share float? So we can go to the SEC filings on this one. This was LYT. What we'll see is that, let's see, look for shares. So this company had in August 18th, about 40 million shares. So the float's around 40 million shares. Okay, that's fine. But then you'll notice here that they did a reverse split back here, a 60-to-1 reverse split. So you had this reverse split. It dropped the float way, way, way down. And I don't remember if there was something else in here. There were some other headlines that were, I think, more recent. But nonetheless, the float was ridiculously low. And so when that's the case, it doesn't take a huge amount of demand to create this imbalance between supply and demand. So let's just say, for instance, we have a stock with a 10 million share float. This is the float. And this here is the volume today. So let's say that has 1 million shares of volume. Then you have a stock that has 1 million shares of volume and a 1 million share float. And then you have a stock that has a 10 million shares of volume and a 100,000 share float. So let's say if this stock goes up 10%, all right, this is the change on the day. If this stock goes up 10%, it had 10 million shares of supply. And with 1 million shares of demand, it went up 10%. So if you reduce the supply from 10 down to 1, based on sort of that theory, this is where you could see a stock that potentially goes up 100%, right? It's got the same level of demand, but it's got a tenth of the supply. And now when you have one that's even less than that, that's when you see, fireworks. This is when things get crazy. And you have the potential to see, 1,000% moves or more. So now the fact is, on any individual stock, it's possible that on the day the individual stock starts popping up, the company has a shelf registration and it's going to start actively selling shares and dumping them into the market. And that's going to effectively create more overhead float and more overhead supply, although we may not know it in that moment. One of the other things that's also very interesting with a lot of these companies is that a lot of these small cap companies, I'll just sort of draw a little pie here. They sell, let's say 10 million shares onto the public market, but they have another 90 million that are held privately, right? So this is the publicly available market. These are the number of shares available to trade. And what's sort of crazy is that the insiders that hold this 90 million, the value of their shares is based on the public float. So this is something that's a little bit wild. I heard someone did this as a kind of a joke. They created a company that had 1 billion shares. And then they went on the street to somebody and said, I've just created a new company and it's going places. I will sell you 1 share for $20. And the person was like, all right. And so then this person said he had a professional valuation done based on that trade price of $20 a share. And so since he had a 1 billion share float, essentially, he said, I'm worth 20 billion now. Cha-ching. And, it was obviously not legit. Like he was joking around, but he was proving a point, which is that actually, not exactly, but very similarly happens. So what we worry about is a stock that does have a very low float, but that, maybe an insider, something shady is going to go on, or that the company is going to decide to sell more shares onto the public market and dilute the float, dilute the value of the company. So all that is to say that no two companies are exactly the same, and it's not a direct correlation that 1 million shares of volume on this stock made it go up 10%. Therefore, 1 million on this stock will definitely make it go up 100%. But in sort of the abstract, this is roughly true based on supply and demand, based on that relationship. So it's not surprising, therefore, that when we see some of these stocks that have a ridiculously low level of supply, or conversely, a ridiculously high level of demand, that we can see these really, really big moves. A big move that we saw this week was on SWIN. Congratulations to those of you guys who got this one. For me, unfortunately, so here's the thing. This is one of these stocks where I'm pretty almost 99% sure it's Chinese. It drops down, it halts down, and then it halts going up and is showing like a $70 resumption. So it ends up being halted for like, what was it? 2 hours. It resumes at 12 in the afternoon, 12:20, and it instantly halts up again at 22 within seconds. And then it's halted again now for another 20 minutes, and then it instantly halts up again, third halt. And then it instantly halts up again, fourth halt. Instantly halts up again, fifth halt. Instantly halts up again, sixth halt. From $15 to $45. Shorts are getting demolished. And then it opens lower, but halts up a sixth time. Goes higher, halts down. Opens lower, halts down. Opens higher, halts down. Opens lower, halts down. Halts up. Opens higher, halts up, halts up, halts up. And this was a very difficult stock to trade. It was difficult for the similar reason that SGD was difficult on Friday. Back-to-back halts are hard. SGD was doing back-to-back halts because this stock was lower priced, and lower priced stocks will halt every 15 cents if they closed the previous day below 75 cents. So again, just to get the whiteboard out, and I did this on in my recap on Friday, but I'll just do it again here. So if a stock closes the previous day, the close price is under 75 cents, so it's under 75 cents, then the halts are every 15 cents. If the close is between 75 cents and $3, the halts are every 20%. If the halt is $3 and up, it's every 10%. In a rolling, I don't know what I was trying. I'm going to do a roll. That's not, it's like, let's just say it's a rolling 5-minute period. So that's a ball. It's a boulder rolling. I don't know really exactly the mathematical way to say a rolling period, but a rolling 5-minute period means that every 30 seconds, the average price of the stock is adjusting to the last 5 minutes. So it's constantly moving forward. And so it's 15 cents, 20% or 10% from that level. So the result on SGD was that it halted once, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, at least 19 or 20 times on Friday. And it was really hard to trade because it drops 11 cents and suddenly you're 2 cents away from a halt down. You try to sell and it's halting down and you can't get out and you're stuck. Well, SWIN was similar, except that the halts were every 10%, but this thing just kept going 10% like that, instant, and it's halted. And it was on such light volume, it was hard to trade. So not easy stuff, just obviously all over the place. So that happened over the week. The float again on that, less than 2 million shares. That's noteworthy. So that was SWIN. We had meds during the week. This one gave us a pretty big move. Let's see if we could pull up. So we had LYT, which had news. LYT, by the way, beaten up daily chart with a recent reverse split. Got a really nice break of VWAP setup on it right here. And then want to remind myself not to overtrade when the MACD crosses over. APM, this one, 2.5 million share float, up 126% with news. Beaten up daily, recent reverse split again. Level 2, a little more spread. Nice breakout there over 5. Squeezed up later in the day. Just super strong price action. 4,000 on that. AISP, this is a recent SPAC merger. So on the scans with news, sole contract award with the Department of Justice for enterprise video and data management platform. and it starts to do this squeeze back up. We see this a lot with these recent reverse splits. Recent SPAC mergers. So that one was pretty good. Now AISP, yeah, I mean this one was really solid. Got $17,000 of profit out of that one, and I actually traded it a couple days in a row. This one just kept going higher. So we did have some pretty solid trades, and I think I had one QNRX on Monday. Was that Monday this week? I can't remember if that was Monday. No, maybe that was last week, but that was a pretty solid trade as well. So, okay. So it's fair to say that in the last week, we've had some pretty solid momentum. And if my P&L is any reflection of that, it's been pretty steady. I did have this sort of, all-star day back here on the 15th. That was, that was a really nice day. Sort of rare, I guess, but just super solid day. And then I had a couple of days back here that were super solid. But I would say that this week it's felt obtainable most days to hit my $5,000 daily goal pretty easily. Of course, I hit it on Friday and then gave back, my profit. But nonetheless, it's felt obtainable. So I think that we are in a pretty warm market. We've had a lot of stocks over the last, year and a half that have gotten beaten up. They've sold off. They've had to do reverse splits. The float is now really, really low. And when these stocks have a catalyst, they can open up and they can move fast, as we have seen. We could see 100, 200, 300% moves pretty quickly. And I noticed my video is a little choppy here. Sorry if that is the case. Hopefully it'll not be too bad. Maybe just when I go full screen and switch back. I'm exporting another video that I'm going to upload to YouTube probably on Monday or Tuesday. But anyways, from the perspective of sector right now, it kind of feels mixed. It feels like any stock with a float of less than 5 million shares is getting a lot of attention. It doesn't feel as tied to a specific sector. We did have the AI weight loss catalyst that was giving us some good opportunities at one point recently, but those have kind of I don't know. It feels like those have sort of been a little played out at this point, and we haven't had one in the last few trading sessions. So maybe that catalyst is over. SGD, this one on Friday. I don't know. I think right now I'm just going to continue trying to be focused each day on which stock is really, truly the most obvious. Is it obvious? Is it the top number one, number two gapper? If it is, that's probably the one that's going to get the most attention, right? So that's kind of my plan right now, is just to try to keep focusing on the one that's the most obvious. And, if we can get some good follow through there, see if I could build my cushion. I did have a mistake one day this week where I went in really heavy on my first trade. I took too much share size. And as a result of doing that, I was like at max loss immediately. So I have to be careful about that. I understand that when the market's hot, there's a temptation to go big and to be aggressive. But right now, I think that for me, I need to try to focus on just being consistent, hitting those base hits, getting myself up first 500 on the day, then 1,000, and then 2,000, 2,500, 3,000. And then as I start edging closer to 5,000 on the day, that's my profit target. So if I get there in the first like 3 trades, okay, this is going to be a day I'm probably going to get up to 15, 20 grand. But if I'm doing an average of 500 a trade and it takes, 10 or 15 trades to get up there, then I need to start scaling back and protecting that profit. I didn't do a good enough job doing that on Friday. So I was left feeling a little disappointed going into the weekend that I'd overstayed my welcome, but was grateful that I chose to at least walk away when I did and not make the situation worse by continuing to push even harder. So at this point, really my game plan, I don't have a ton of stocks that are on continuation watch. Meds was on watch on Friday, and it did end up going up all day, but the volume is very light on it and the spreads were big, so it wasn't tradable. Having said that, it is at an interesting place on the chart, so maybe that'll continue higher next week. APM, I had that on watch for continuation for a bounce. We got the bounce and then it sold off, and I didn't even make money on it. So, or maybe I got one trade, but it wasn't even a good one. So that was kind of lame. Some of the stocks on the continuation scanner, this is sorting just by the range, but some of them are at the bottom of the range. So you could look at them for a reversal, but I haven't been as interested in that recently, especially with the Chinese stocks. I just sort of don't want to mess with it. So APM, we already looked at that. OCEA at 553. COCH, this one, it kind of had that rejection day a couple days ago. I don't really like the way it trades. SWIN, it popped up yesterday, but again or Friday, but again on light volume. LYT, you might get a pop on this the way we did on APM, but the daily chart's not as good. APM's daily chart, let's look at that. At least it was a green candle, right? VANI on the continuation scanner. This one could be maybe interesting for a bounce, but it's getting a little cheap at $2. So I don't know that we would get the type of bounce that we get when they're a little more expensive. AISP, the SPAC merger, probably worth keeping an eye on if it can get above the 200 moving average. That one is probably worth keeping an eye on. SRTC floats a little higher. ADIL float is low, but it's below its 200. QNRX back at $1.18. NKGN, I've traded that one. Not that interested in it. So now I'm kind of, getting further down. Not that these don't have some decent moves, but I'm just not as interested in any of them. So I don't think I'm going to have too many that I'm watching closely on Monday morning for continuation. VANI, Meds, those are a couple to watch, maybe, but not really sure. I think Monday morning, for the most part, it'll be what's on the top gainer scanner. And my plan will be that I'll look at my scans at before 7 a.m., 6:30, 6:45, and I'll just see how big are the biggest gappers. Is it worth me hustling over and sitting down here at 7, or is there no rush? If our leading gappers are less than 50%, then I'm not going to be that interested. If we have leading gappers that are up over 100%, then I'm interested. That's kind of the cutoff. It's not strict, but that's kind of roughly the way I think about it. If the leading gapper is only 25, 30%, I'm not rushing at all. Having said that, it's also true that it only takes one. And you can have a totally dead gap scan, and then one stock comes out with news, rips up 50%, and is instantly the leading gapper gainer in the market. And now it's time to get focused. So I probably should just try to be consistent about showing up at 7 a.m. every day regardless. But there's just a lot of days where there really isn't anything to trade that early. So I just end up kind of sitting and doing nothing. So that's my game plan. I'm a bit under the weather, still hoping to feel better by, the Monday, but probably won't be 100% for a little while. So just kind of dragging a little bit, end of winter here, and I don't know, just a little sick, but had some time here today, so wanted to record this for you. I hope you find it helpful. If you do, I hope you hit the thumbs up. I hope you guys subscribe to the channel. I've got a bunch of new episodes I'm going to be uploading to YouTube soon, which I think you'll really like. So make sure you hit that subscribe button. And if you want to come check us out over at Warrior Trading, we'd love to have you. You're always welcome to come on over. So you can check out the website, warriortrading.com, and you could check out this demo that we have. We have a platform demo, or you could join now. You could see the different subscriptions and memberships that we offer. All right. So, and in the morning, those of you guys that want to go to warriortrading.com/day trading, there is a scanner here that updates every day. It's a 15-minute delay, but it does give you a list of the top gainers. So since I usually want to be trading stocks that are in the top 3, this will give you a good sense of, what those top gainers look like. So you could bookmark this page and come back to it. All right. Thanks again. I hope you guys enjoy the weekend, and I'll see you bright and early on Monday morning.